Welcome back to Boss Economics World, folks, the only place where we rip the band-aid off the festering wound of economic mismanagement and show you the pus of policy failure underneath. I'm your host, the guy who's been screaming into the void about government incompetence since forever, and today, oh boy, do we have a doozy of a dumpster fire to unpack. Traders are unwinding bets on Federal Reserve rate cuts, tariffs are flapping in the wind like a politician's promises, and inflation. Ha! Apparently, it's lower than forecast, but don't worry, we'll get to why that's a load of hogwash. So, buckle up, grab your pitchforks, and let's dive into this economic clown show, point by point, surface to core, because your wallet's getting lighter, and it's not because you're on a diet. Let's start with the headlines, shall we? Traders on Wall Street, those poor, over-caffeinated souls betting on the Federal Reserve to save their portfolios, are throwing in the towel on rate cuts. Why? Because the Fed, in its infinite wisdom, has decided to play coy with monetary policy, all while the US and China engage in a trade war truce that's about as stable as a Jenga tower in a windstorm. According to recent activity in rate options, the unwinding of these bets kicked off right after the US walked back its triple-digit tariff threats on China, and Beijing, in a rare moment of de-escalation, did the same. Oh, and then the Bureau of Labor Statistics, BLS, dropped its latest inflation data on Tuesday, May 13, 2025, showing consumer prices rose less than forecast. Cue the confetti, right? Wrong. This is where the surface-level nonsense starts to peel away, folks. The Fed's refusal to slash rates isn't some heroic stand against inflation, it's a masterclass in indecision, fueled by a government that's been playing tariff roulette with the global economy. And let's not forget, the BLS data. It's softer than a politician's spine during election season. 3 straight months of lower-than-expected inflation. Sounds like a convenient narrative to justify keeping rates high and screwing over the average Joe who's drowning in credit card debt at 24% APR. But don't worry, we'll dig deeper into the inflation lie in a bit. Now, let's zoom in on the real villain of this story, tariffs. Or, as I like to call them, the economic equivalent of a toddler throwing a tantrum in a china shop, pun intended. For months, former President Donald Trump's scattershot tariff threats have been the gift that keeps on giving, headaches, that is. Triple-digit tariffs on Chinese goods. Sure, why not? Actual levies now in place. Oh, you betcha. And what's the result? Toxic uncertainty, as the eggheads on Wall Street call it. Businesses don't know whether to invest, consumers don't know whether to spend, and the global supply chain is more tangled than a plate of spaghetti after a food fight. But here's the kicker, the US and China just called a temporary truce, and Wall Street's acting like it's the second coming. Traders are unwinding rate cut bets because, hey, maybe the economy won't implode after all. Except, hold on a second. A truce isn't a solution, it's a band-aid on a gunshot wound. The tariffs already in place are still jacking up the cost of goods, and the threat of future tariffs is still looming like a guillotine over the global economy. According to the Peterson Institute for International Economics, U.S. tariffs on Chinese goods have already cost American consumers and businesses over $200 billion since 2018, with an additional $40 billion in deadweight economic losses as of 2024. And that's before the latest round of tariff hikes in February 2025, which, according to Fitch ratings, haven't even fully hit core goods prices yet. More on that in a sec. So, what's the government's brilliant plan? Walk back the threats, pat themselves on the back, and hope we all forget that this whole mess is their fault in the first place. Meanwhile, the Fed's sitting there, twiddling its thumbs, refusing to cut rates because, hey, why help the little guy when you can keep propping up Wall Street's balance sheets? It's economic malpractice, folks, and we're all paying the price. Now, let's get to the juicy part, the part where the government tries to gaslight us into believing everything's fine. The BLS data says inflation's lower than forecast for the 3rd straight month. Sounds great, right? Except it's a lie by omission. Brian Colton, chief economist at Fitch Ratings, dropped a truth bomb in a recent note. Core goods prices have yet to reflect the impact of the tariff hikes that have taken place since February 2025, while services inflation continues to gradually ease. Translation. The pain's coming, folks, it's just delayed. Inventories of goods imported pre-tariff hikes are running dry, and when they do, core goods inflation is going to spike like a rocket. But wait, there's more. Let's talk about the Consumer Price Index, CPI, itself. The BLS loves to tout its core CPI, which conveniently strips out volatile food and energy prices. Sounds reasonable, right? Except food and energy are the things we actually need to survive, and they've been skyrocketing. According to the U.S. Department of Agriculture, food prices in 2024 alone rose by 5.8%, with meat, poultry, and fish up a whopping 8.1%. And energy? The Energy Information Administration reported that gasoline prices in early 2025 were up 12% year-over-year, thanks in part to geopolitical tensions in the Middle East and OPEC's refusal to boost production. But hey, don't worry, the BLS says inflation's under control because they're ignoring the stuff that's actually burning a hole in your wallet. And here's the real kicker, shadowstats.com, a site that tracks alternative economic data, estimates that if the government calculated inflation the way it did in the 1980s, before all the statistical wizardry, real inflation in 2025 would be closer to 10%, not the 3.2% the BLS is peddling. That's right, folks, the government's cooking the books, and you're the one getting burned. So, what does this all add up to? A government that's asleep at the wheel, a Fed that's too scared to act, and an economy that's teetering on the edge of a cliff. Let's connect the dots. Tariffs and trade war uncertainty are killing business confidence. U.S. manufacturing PMI, a key indicator of industrial health, has been in contraction territory, below 50, for 6 straight months as of April 2025, according to the Institute for Supply Management. Consumer confidence. The Conference Board's Consumer Confidence Index plummeted to 92.3 in April 2025, its lowest level since the post-COVID recovery. And don't even get me started on the labor market. While the BLS brags about a 4.1% unemployment rate, the U6 rate, which includes underemployed and discouraged workers, is closer to 8.5%, per the latest data. Meanwhile, the Fed's refusal to cut rates is choking off any hope of a soft landing. Mortgage rates are hovering near 7%, per Freddie Mac, pricing out first-time homebuyers and stalling the housing market. Credit card debt. It hit a record $1.14 trillion in Q1 2025, according to the Federal Reserve Bank of New York, with delinquency rates spiking to 8.9%. And small businesses? The National Federation of Independent Business reports that 40% of small business owners couldn't pay their rent in full in April 2025, the highest level since the pandemic. This, folks, is how you get a recession. Not with a bang, but with a whimper of government incompetence. The Congressional Budget Office is already warning of a potential GDP contraction in late 2025, and Goldman Sachs recently upped its recession probability to 35% within the next 12 months. But hey, at least the stock market's doing great, right? The S&P 500's up 15% year-to-date, fueled by AI hype and stock buybacks. Too bad the average American doesn't own a single share. So, there you have it, folks, the Fed's rate cut fiasco, the tariff tantrum, and the inflation lie, all wrapped up in a neat little package of government failure. Traders might be unwinding their bets, but you know who's really getting unwound? You, me, and every hardworking person trying to make ends meet in this clown show of an economy. The government's playing chess with your money, but they're using checkers rules, and losing badly. So, what can you do? Stay informed, stay angry, and for the love of all that is holy, don't trust the BLS to tell you the truth about inflation. This is Boss Economics World, signing off, because if we don't call out this nonsense, who will?